Hey friends, we are going to do a quick-ish market update, see what's going on in the Denver real estate market now that the numbers are out for last month. I did one of these last time the numbers came out and people seem to find it useful to some degree. So what we're looking at first is the Denver Metro Real Estate Market Trends Report from DMAR. And this kind of gives us just an overview of what's going on, and we'll try to put it into context because that's what matters, right? Context. I can tell you there have been 5,618 closed homes, but what does it mean? So yeah, sometimes what it means is we don't know yet. Right now we're seeing some trends. The changes from July to August are not quite as extreme as some of the changes from the previous month, but we can still look at what's happening and figure out where it's going. So what we're seeing here in the residential market, this is detached plus attached properties, so basically all properties in the Denver Metro. First interesting thing to stick out is active listings dropped pretty significantly, almost 12%. Active listings, this is the one that from June to July saw a big jump up. So we were saying, oh great, we're getting way more active listings on the market. The market's calming down, becoming more balanced, becoming more of an opportunity for buyers. Those things are still true because, as I'll show in some of these later numbers, it's less of a frenzy that it was in April, May, and going back even to March. But we did see a drop in active listings. So, I mean, what that reminds us is it's still a strong seller's market. Inventory is tightening a little bit. The buyer pool may still be shrinking. We'll talk about that later too. But we did see a drop in active listings, so inventory is still very tight. We are seeing, and if you look at year over year, I mean, geez, way down. So closed homes came down by 10%. Also interesting, the prices came down a little bit. Now, this is not surprising to see. Seasonally, generally after July, prices start drop by a few percent between July and October-ish. So we might be seeing a little bit of that, but this also may be a result of the market cooling. 1% on average, 0.4%, not even on median. That's not a big drop. Really what's significant is that it's not going up anymore. If you own a house, does this mean that the value of your home went down? Not necessarily. Really, for me, context, what this means is we're seeing fewer bidding wars. It's just not, it's not the frenzy. It's not these crazy, $70,000, $100,000, $130,000 over asking price that we were seeing months ago, so in the spring. That's good for the health of the market. Days in MLS actually went up to 11, so that's significant. That's still a very small time on market in average, not even 2 weeks, but it did see a jump, so that's interesting. Then you see they break out detached and attached here. Nothing too much to note other than, attached days in the market are still more, so that makes sense. Detached homes are still the belle of the ball. So a lot of market insights here. We got some expert opinion, but we're just going to go down to some more numbers where we are combining detached and attached again, just so we can see in context. So you see these two columns. So this is July and this is August. And what we're looking at is active is this yellowish, orangish number. So you're seeing the drop there. You see the big jump from June to July, and it's coming back down in August. So inventory tightening up a little bit. New listings also have come down. We saw just a whole bunch of new listings in June. Those have gradually come down. So we're not seeing as many new properties on the market. That's going to contribute to that tightening. Closed properties, just a gradual decline there too, which would follow suit with fewer active, fewer new listings, that type of thing. So nothing terribly surprising. We're seeing median closed prices here. Again, a small drop from July to August. That's in both detached and attached. Average close price, we can go past that and see if there's anything else interesting that we should see here. We talked about days in the market. New listings, so basically, this line, the orangish yellow one is detached and the blue one is attached. So you see there's just a lot more volatility in the detached single family homes than there is in townhomes, condos, and that type of thing. We saw a recovery with a lot more coming from February until It dropped in May, but then kind of peaked in June, and now we're seeing this really is just a seasonal decline. So what this means, if you're a buyer, seasonally, there's still more opportunity to get into a house without a bidding war, stuff like that. Interest rates are still very, very low, so that's great. Interest rates have been low, it seems like, for a very long time. So if you're a buyer, it may make sense, even though we're seeing a little bit of tightening of inventory, if you were discouraged back in the spring, whatever, to get back in the game and start looking again, because a combination of, a less crazy, hectic market plus those interest rates being very, very low, it just makes sense. You're going to have an opportunity that you wouldn't have had in April or May. So what I'm going to do, because I want to talk about from a seller standpoint, is change over to a different report here, and I can show you, that's the same one. I can show you some interesting things about what this means for sellers. So what this is Megan Eller from First American Title. She puts out a report, it seems like all the time, like she puts out one every week. She's amazing. She crunches the numbers like nobody. A lot of good data in here. A lot of stuff that's just way too intense for what we need to talk about, but some things that are interesting. So I'll tell you first, what does all of this mean for sellers? What does this mean if you're looking to sell and inventory is still low, coming down a little bit, but it's less of a feeding frenzy that it was in the spring? So what happens a lot of the time is sellers will say, well, my neighbor sold his house for X, so now I need X plus 5%. They'll be listing their home for that, X plus 5%, and they're not going to get it because the market's different. So let me start out with this. So what we're seeing here, these are the showings, the showing schedule for all the listings. So we see total showings in green and showings per listing, which is the most interesting. This is this dark blue line. So this is a good indication of how much activity and how much buyer interest there is in the market. So you see showings per listing, we were at 20 here in March, almost 21 actually, and still around 20 in May. We are down to under 7 showings per listing. That goes along with what I was talking about before. It's just not as hot. It's not as much of a frenzied panic. So what this means is you're not going to get as much activity on your house, and you're not likely to get the same bidding war that you would have gotten in the spring. You may still get multiple offers. If it's a good home and it's priced properly, you probably will. But that's the point, pricing it properly. If we try to price it where or over what our neighbor got in the spring, we're going to be disappointed. And chances are we're going to have to make a price reduction at some point, because our eyes get big and we're like, oh, he sold for that, I can sell for this. A lot of people are having to make price reductions. So as a seller, you need to be strategic with your pricing strategy. First of all, you need to price at market or even slightly below the first time. I've talked about this ad nauseum, so I will not go to it in detail here, but I think you get the reason for that. And if you do need to make a price reduction, which happens a lot of reasons for it, no big deal. The longer you wait to make that reduction, the bigger that reduction will have to be. That's what we're seeing. So it makes sense to price right the first time and to be decisive with your pricing, even if you need to come down a little bit. So we're just seeing way fewer showings. That goes along with the market cooling and just seasonal dips. We're around Labor Day now. Things are just relaxing. They'll continue to relax probably until December. One more thing I want to show you is this is odds of selling. This is something Megan puts together where there's all sorts of different metrics that goes into these odds of selling and what that means. And we're just seeing the odds of selling. We're up. It's hard to see, but in the spring they're up around 85% and we're down to around 75%. So still a very strong seller's market, as I've been saying, but they're just a little different. And if you're acting like if you're acting like it's May in September or October, chances are you may be disappointed. If you're keeping up with all this stuff and you come up with a good strategy, chances are you're going to be happy. So that's basically it. So bottom line is good time for buyers because interest rates are still so low. Even if you're paying a little bit more for a house than you would have before, with these low interest rates, you'll be paying less over time, if that makes sense. So purchase price can even be a little higher, but interest rates are so low, your overall the overall money you're paying over the course of that mortgage can be lower. And for sellers, be decisive. Talk to your realtor about timing. Is this the best time to list my house? Maybe yes, maybe no. Depends on your home. And be smart with price, because if we get greedy, chances are we're going to have to drop our price and sell for less than we would have had we been strategic and aggressive with the pricing in the first case. So if you have any questions, let me know. I will put my contact info below as always, and hopefully this was helpful. I'll talk to you guys soon.